Welcome to Finpod, your daily financial digest. I am your host, Evan, bringing you the latest market action to end your day. This podcast is brought to you by Fintwit.ai, your go-to platform for real-time trading signals from X and expert stock recommendations. Let us dive right in. The biotech sector is buzzing today. QURE is the standout, surging over 78%. The massive move comes after the FDA provided a major green light for its gene therapy candidate, confirming that existing 3-year Phase 1 and 2 study data is sufficient for a biologics license application. This effectively restores an accelerated approval pathway for their Huntington's disease treatment, which investors had previously feared was derailed. This news also acted as a huge catalyst for ClearPoint Neuro, which jumped 26%. ClearPoint's navigation system and cannula are critical for administering this therapy, so the validation of the drug directly boosts the outlook for their platform. On the flip side, we are seeing continued pressure on Snap, which slid another 8% today. The market remains skeptical of its expensive new augmented reality glasses, with investors questioning the mass market viability of a $2,000 hardware device. Meanwhile, Robinhood is rallying about 9%. The broker is winning over investors with a combination of record trading volumes and a new commitment to cost-cutting, including a 10% workforce reduction. Finally, T1 Energy is up nearly 5%, buoyed by the company's recent strategic moves to scale its solar and battery storage manufacturing capabilities. It was a tough session for the major indexes. The S&P 500, the Dow, and the Nasdaq all finished in the red today. The primary driver was a shift in sentiment regarding the Federal Reserve. After the latest central bank meeting, investors were rattled by hawkish signaling, with a significant number of Fed members projecting at least one interest rate hike before the year is out. This has put a damper on risk assets, particularly in the tech and communications sectors. We saw a clear rotation away from high-growth tech as yields climbed, and late-day selling pressure accelerated as the market digested the reality of a prolonged high-interest rate environment. In the AI economy, the theme remains one of massive capital expenditure but growing investor scrutiny. While companies like Google are leaning into AI with major new banking partnerships, such as their deal with HSBC to deploy agentic AI tools, we are seeing some fatigue elsewhere. Apple, for instance, is facing questions from investors who are growing impatient with the pace of their AI product rollouts. Meanwhile, the semiconductor space remains a battleground, with companies like Qualcomm positioning themselves to challenge the dominance of NVDA and Intel in the data center and edge compute markets. The underlying story remains. Massive infrastructure build-outs are continuing, but the market is now demanding to see more tangible revenue results from these investments. Looking at other stocks in focus, we saw Jabil Circuit report earnings today. The company beat expectations on both the top and bottom lines, driven by robust demand for artificial intelligence infrastructure, which pushed the stock higher in early trading despite a flat finish. On the other hand, CarMax saw a significant drop of 9%. While they topped revenue estimates, investors were clearly disappointed by the company's margin pressure and the need for a digital overhaul as the new leadership team works to navigate a challenging used car market. To wrap things up, we saw a market weighed down by hawkish Fed expectations, while individual winners were largely driven by specific regulatory breakthroughs in biotech and strong infrastructure demand in the AI space. Thank you for listening to today's episode of Finpod. If you enjoyed this update, please like, share, and subscribe, and leave a comment if there is a specific stock or sector you want me to cover tomorrow. For stock recommendations, visit Fintwit.ai. See you next time.